Good evening, everyone. This is John Locke, and this is the Locke in Your Success Trade and Market Update for August 25th, 2013. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making specific trade recommendations. Also, the trades and/or results covered in the presentation may or may not be live trades. In the event they are hypothetical computer simulated trades, we do the best we can to accurately represent them. And also, we would like to remind you that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And if you're watching this on YouTube or SMB, please come on over and visit our trading blog at www.lockeinyoursuccess.com. All right, let's take a look at the markets. Here on the Russell, things are pretty much acting as expected. We were thinking we're going to keep a pattern similar to what's happened the last two times we've done this, where we run sideways for a while, run back to a support level and start to take off. Happened again here, and pretty much it looks like it's happening again here. We came down to our support level, and we're starting our blast off here. Whether we continue to go or not is a little more iffy this time than it was last time. The last couple times this happened, all the indices were kind of in sync. Right now, the Russell's still doing the exact same thing. If you take a look at the SPX, this is still very bullish. We basically did the same thing here. We came down to what I would call a support level. This is a line that I drew in for a projected support level should the market come back down to test an area, and here we are. And we're starting to bounce here, which is completely expected. However, if you look at the Dow, we actually had a breakdown on the Dow. So this is kind of telling us when we start getting divergences in the indices that things may be changing a little bit here. So this is giving me a little bit of a concern about my conviction of the market or the Russell blasting off to the upside again. If we look at the NASDAQ's doing okay. We had a breakout here. We came down, we retested a support level, and we're starting to take off again. So what I would be looking for as maybe an early warning sign on whether the market's going to continue to go up and blast off, or if it's going to start to drop down, is what this NASDAQ and Dow do. So if the NASDAQ starts to break to new highs here, it's very likely that the Russell, the SPX, are just going to continue and go ahead. And if that does not happen, and instead the Dow starts breaking down to new lows, it's probably going to test this lower area or this lower support level down in here at the 14.4 level. And if that happens, that's going to drag everything else down with it. It's probably going to cause NASDAQ here to at least come down to the support level, possibly even break that level. And that would cause the SPX, of course, to break. If you go back to the SPX, that would cause the SPX to break trend as well, and probably come down into this area down here, the 1600 area, and that would cause the Russell to pull back into this range here, which could get kind of ugly. So we're going to have to watch that. And if the NASDAQ can't break to new highs and the Dow starts to break down, with the Russell, we're probably coming back and we're probably going to at least test the 1010 area, or at least test these lows at the 1020 area that we had earlier in the week. But so we're in a little bit of confusion. As of right now, my primary assumption is that the market's going to continue holding its pattern until it shows me something different. So there's no evidence which way it's going to go. I am just being a little bit more cautious till I see the NASDAQ break higher and the Dow to actually turn around, because without the Dow participating, and if that really breaks down, it's going to drag everything else down with it. It's going to at least throw us into a sideways range, and we'll have to change our projections. But as of right now, I'm still kind of holding this projection up here at the 1080 area for expiration close. Also, this here was a topping pattern we put in short term. We have a resistance area here, so we're going to have to see how we react up in this area, even if we do continue to go up. So for this week, I would tend to say that I am still bullish, and we're probably going to at least test this area here before we retrace back, possibly go all the way up to new highs, take 1 or 2 day shot down, and then continue higher up to this 1080 area longer term. So that's what we're thinking, unless, like I said, one of those events takes place where the Dow breaks down and everything else starts to go with it. Okay, let's take a look at our positions here. Why don't we start out as usual with the V condors. If we come to our September V condor here, there were no adjustments to this position this week. The market's just been kind of not doing anything too crazy. We have a gain currently of 25.12, and this is what the current position looks like here. We're pretty much right in the center. If we maintain or stay in the center, like I said, I may try to raise this a little bit higher. As it is, we're going to expire with a $3,400 profit unless the market does something really crazy to the downside. If it does something really crazy to the upside, we'll probably be able to hold this into expiration and make some money, because the market, for us to lose out, would have to go all the way over 1120, which would be quite a run. So this trade's looking pretty good as long as the market holds up for the month. Should be at least a $3,400 profit, but of course we don't do anything until it actually expires, because you never know. Also, I entered the October V condor on, let's see, on Monday. So if we come over here, I went ahead and sold on the put side 9/10s. Oh, let's go back to Monday. As I was saying, I went ahead and sold the 9/10s, which were right around 10 delta. I bought the 880 puts. I came in here, I bought a 1000 put, and on the call side, came in here and sold our 11 delta calls at 1100. Bought some 1030 calls to cover that, and bought a 1000 call for our straddle. This is what the position currently looks like. We are down a little bit of money because we had an up move, and apparently I didn't get the best fills on stuff. So everything looks good, and if we go too much higher too fast, then let's go to Friday. Here's where we sit on Friday. If we go too much higher too fast, we'll have to start buying some of these back. If the market kind of calms down, we'll be fine. But we did have a fairly aggressive run off the bottom here. So we're at about break even, so everything's perfectly fine. If we go to our September M3 trade, what we did on Monday is, during the day, if we take a look at our T-log, I rolled back 2 of these 1020 puts to 1000 early in the morning. Throughout the day, I did 2 more. And right at the end of the day, I did 1 more. So I did a total of 5 this day. The times aren't correct, but the prices have been corrected, so the prices are correct. From there, we didn't do anything until Thursday. So if we come down here to Thursday, we got a fairly good bounce. And what I ended up doing is coming in here and selling a broken wing butterfly. I sold one 970, I bought 2 1000s, and I sold one 1070. This again is all in the process of continuing the rollback. Like I said, I was going to roll back the butterflies to 1000. This is continuing that process, only what I'm doing here is I'm starting to straighten out my gamma trend, because my gamma trend is kind of bad here. And for example, if I were to take another one of these butterflies off and sell this 970 and buy 2 more of these 1000s, and sell 1 of these 1070s, you'd see the gamma trend really starting to straighten out here. And then of course, if I come in here and I buy another one of these verticals, that's pretty much what it's going to take to completely straighten me out. Now, I'll probably have to go a little bit further than that, but this is basically the idea, as I'm just starting to yank that upside risk off and run from there. So that's the plan more or less going forward as the price goes up. Now, what I ended up doing, because again I was away on Friday, I ended up buying a 1000 and selling. I did that vertical, that 1000 1020 vertical, instead of doing the other butterfly, because I didn't need a major delta increase of doing the whole butterfly, so we just ended up doing something like this. And I did that on Friday, just to bring our delta down a little bit. Still, we have bad gamma trend issues, but I'm not too concerned about it. I think we could probably stay with it if the market goes. So here is our position as of end of day on Friday. Let's go all the way to 1600. You can see I took that 1,000 1020 vertical in there, and this is what the position currently looks like. We are having some gamma trend issues that we will need to straighten out. Looks like I may have made a mistake here somewhere too. Yeah, this is not, shouldn't look like that. So I have an error in here somewhere because I do not have an extra put hanging around. I'll have to see where I did that, because I know my delta is not that high. So we'll take a look at this and figure that out. Not sure what's going on with it, but you kind of get the idea. Our delta is actually like minus 50 here, so we'll just keep it with that. Even on Friday, it's minus 50. When I correct it, I'll correct it and show it to you next week. And as far as this week, we also entered the October Bearish Butterfly. We did that Friday morning when the market was up, because that's when I was home on Friday. And if we go to our October Bearish Butterfly, as of Friday afternoon, I entered 10, 10, 20 butterflies, and the position is minus 92 delta, positive theta of about 88, so right around 1-to-1 delta theta ratio. And it was, as of the end of the day, it was up just a little bit of money. And here's what the position looks like here. So from here, obviously we scale into the upside. And do I like the entry this month? I'm not particularly crazy about it, because I do think the market's going to 1080. That's 40 points, so it's going to stress you out a little bit if it does make it. If it goes a lot higher than that, then if it overshoots that area, then we're going to draw down some. But I do like to trade from a profitability standpoint. It should be a profitable trade this month without too much of a problem. It may draw down some, so that's what we're looking at for the Bearish Butterfly. And we also entered the September ROCK trade due to the volatility level. This trade was entered on Wednesday, and it was entered as an M3 trade. So here we bought 10 950s, sold 10 1000s, sold 6 1010s, sold 4 1020s, bought 10 1050s, and we have a call up here at 990. At the time of entry, I think we were like minus 20 delta. If we come back to Wednesday, we're running about minus 21 delta. Here's what the position looked like on Wednesday. Of course, with the up move, I probably should have done some sort of a minor tweak to this if I was particularly bullish. Being a ROCK trade, I'm not so concerned with this drawing down a little bit, because I know if the market does happen to go up a lot, I'm going to move into a configuration that's going to pull our money back into the trade really quickly. So I'm less concerned of a ROCK trade M3 drawing down than a regular M3 trade drawing down. As of right now, we're minus 66 delta. We're up a little bit of money, and this is what the position looks like. So that's all our positions, and that's it for now. And have a great week, everybody. Thank you, and good night.